Hey guys, this is Simon with Trade and Perform Coaching doing the trade review for Wednesday, the 27th. Um, so, uh, this morning, quite an interesting day, right? Pretty much straight down yesterday, pretty much straight up today. Um, and the question becomes always um, is two parts. Is there a way, is there a way where we can make money on days like today and be able to do this on a day by day basis, right? And B, how do I avoid losing money on days like yesterday and today? So, number one of the things that I am repeat again and again and again, certainly every morning: open drive higher, open drive lower. Very, very dangerous. Very easy place to lose a lot of money. Not only is it a place to lose a lot of money, but psychologically, right? What a beating to open the day and just get your knees knocked out from underneath you right out of the gate, right? Issue number two is the frustration that comes with either fading it, right, and not knowing whether to fade, or B, do you grab it right out of the gate? So if we look closely, right out of the open, we had Globex low come in at overnight at 2101 and three quarters. Actually, let's take it even a bigger step back. In yesterday's trade review, I had gone through the volume profile on ES. I'm going to remove this real quick. And I had drawn, let me see if I can find my drawing tool here real quick. Here it is. Okay, we'll get rid of that. Have everything back to normal. Okay, so I'd stated that that we were due for a break from consolidation. So on Tuesday's market preview, I had said that we were going to look for a break from balance, and then whether it gapped up and we either had a push higher, or we gapped down and we would have a push lower. Otherwise, within this area, I would look for a chop and grind, right? So obviously yesterday we gapped down, we drove lower, had a little bit of reversal at the end of the day. This morning we opened, made a slight push down into yesterday's trading range, and obviously we closed the gap, and then we made an immediate and very hard push to the upside. Now, to me, it looked like an unusual open drive higher. There was actually no news slated for today economically. There was news coming out of Europe with the G7 and the IMF, Germany and Greece discussing their various options and what Greece was going to do to further delay defaulting on their loans. It seems like it's now become the never-ending story. That being said, apparently the news was positive. The response was very strong to the upside. Again, so what that ended up looking like was this. Here we go. So let's spread this out a little bit. Oh, I'm not sure that I can without here. I can grab this, move it down. There we go. So let's spread this out just a little bit. Oh, let's see if we can move this down to this part of the neighborhood. There we go. Okay, so if we look at the open, right, we opened up, we had an immediate push to the downside. If you want to see what that looked like on a 1 minute chart, I can show that to you. That would be right here. And you can see that the push was very violent and direct. We had responsive sellers right out of the gate, right out of our resistance zone, right? We opened, we pushed back to 2107, immediately rotated down. Now, what I would have expected, or where I would have looked if I would have been a responsive buyer, where would I have looked to have been a buyer? 2100 would have been a pretty logical place to take your first shot. It never got down there. Immediately we got responsive buyers up, and I think the reason we got responsive buyers up was because of the news that was coming out of Europe. Additionally, right, usually if you look to the left, and this is specifically to the guys in my room, right, this is a poorly auctioned area right through here. You would at least expect we would come down to 2100 even, right, or 2101, and finish through this unauctioned area before getting a reverse. That being said, the people who took the long this morning, at least in my book, if you took a long right out of the gate, this is my 2 cents about that. You got lucky, okay? This is a 50-50 deal. Normally the market will want to re-auction this part of the market, and for those who didn't take it, it's a frustration, right? One day we get an open drive lower, and if you try to step in, you got absolutely eviscerated. The next day, if you didn't step in, you missed a beautiful run to the upside. What's the solution to this problem, right? It's very simple. If you sidestep the first half hour to 45 minutes of the day when there's news, if you identify early that there's an open drive higher or an open drive lower, you at least don't get killed. You don't get murdered, right? That's a big plus. Part of the deal of maintaining and being able to maintain balance on a day-by-day basis and grow your account is not having these constant in your P&L, have these constant curves, right? This does you no good if you're doing this. It does you much more good if your equity curve looks something like this, right? This is what we would all prefer in our equity curve, and what a healthy equity curve, in my opinion, looks like. So, moving on, let's go back to our daily chart. I actually, not realizing that there was news out there, when we came to Globex high, or just past Globex high, I think we were within a point. I took a short at 21.11, which was approximately a point above Globex high, figuring we would get exhausted right in this 21.10, 21.11 area, and I obviously got run over. I did a couple of things smart and a couple of things not so smart. I cut my trade size in half. That certainly helped, but I still ended up getting run over. Obviously I got stopped, and I had a relatively small stop of 2.5 points. So net on a normal size position, that would be 1.25 for me. Not a big deal. After I got run over, the next thing I did was go, hey, wait a minute, something's going on and I don't understand what's happening. There is nothing wrong, and I want to stress this, it's really, really important. When you get into a market environment and you are not clear on what the heck is driving the market or why the market is behaving the way it is, there's nothing wrong with saying, I'm stepping back from the market here because I don't understand, right? Now, what became clear to me was, obviously, was that immediately after we had this initial open drive, you'll notice soon after 9 o'clock, we went into very tight rotations, right? What's the size of the rotation here? 2113 down to 2110. That's a 3-point counter rotation. I'm normally looking for a 6 to 8 point rotation to take a counter trade in the other direction. If the market is rotating in 2 to 3 point rotations and I become accustomed to taking those rotations, I get killed on a day like yesterday trying to buy those rotations as we're going down. So is it a little bit frustrating? Absolutely. But if I stay by my trade plan, I stay by the proper size rotation, two things happen. First of all, I did not get a long in any of this area, which is unfortunate, but how are we to know, how are you to know when news pops up like this that we're not going to come back and retrace all the way back down? The answer to that question is I didn't know, so I chose to do nothing in this area, right? Next, if you look from the trade plan perspective, right, what's the trade plan? The trade plan is to take the first trade into the zone and look for a rejection out of that zone within somewhere between a 15 and 25 minute period, depending on the type of environment that we're in. So if you look, we opened up and pushed up into the 2107.25 and rejected out of there. How far did we reject down? We rejected from 2107 all the way down to 2102. Was mission accomplished in the first 5 minutes? Yes. Did I take the trade? No. It was the first 5 minutes of the day. But this zone has now been tested. Where is my next trade location? Well, you could take Globex high if you're aggressive, which I was, and it hit in the first half hour. I ended up paying for it there, right? The next place to take a trade would have been at this 2117.25. It hit over New York lunch. At this point, with the lack of rotation through the course of the day, I'd kind of thrown my hands up and decided I didn't want to take any trades at that point. And if you look, even if you took the very front of the zone, it took pretty much almost a perfect rotation down and an infinite amount of patience. Look at the time this took: 5, 10, 15, 20, 25, 30, 35, 40, 45 minutes, right? over 45 minutes before you could get a 2-point rotation down. Guys, simply stated, this isn't my type of market. I don't make a lot of money in these markets, and if anything, I set myself up to get frustrated and lose. So going by the um, going by the zones, if you look, we next crawled up all day and finally got to the open gap at 21.24, right? When did we hit this 21.24? Literally with 3 minutes left in the day, and then we rotated down to 21.20 in the aftermarket, or just after 3 o'clock when the NYC had closed. I realized the futures market had still been open. So, the lesson from today, number one, did I have the correct call? Yes. We came back up and we retested the point from which we broke down, and then we actually came all the way up and filled the gap. I mentioned that I thought that was a strong possibility that would happen over the next couple of days. The next question is, did I get an entry opportunity to take advantage of this? Well, let me tell you, in Fantasyland, I would have been able to grab this first downside rotation and make a killing out of it. The reality is, it didn't get down to a tested Globex low. I faded just above Globex high, thinking we would get a push back down, and ended up getting a small stop, but got stopped, right? And then I went to the sidelines and just said, okay, I can't make it work to the downside. I don't have an entry to the upside. And the last thing I'm going to do, at least for me, my own personal trading, is chase this to the upside. Now, had I known for a fact in my heart of hearts that we were going to 21.24 without first coming back for maybe a backside test of 21.10, right? This is not an outrageous request. If we look from 21.17 to think that we could come back and backside test this 21.10 area prior to making a run up to 21.24, that would be what I would consider normal trading. So, my particular style of trading does best on balanced days and days where we have good rotations. That didn't occur. So how do I handle that? I look at my trade plan. My trade plan tells me that I'm not going to be very successful on days like today. Not a big deal. I kept my stops controlled. I did not take a significant hit. Psychologically, I'm fine. Worst case scenario, I spent some time being bored in the market, but nothing dramatic or nothing awful happened. Most of my best trades, even from a scalping standpoint, took place in the last hour or setting up in the last hour, and that's generally not an ideal place for most of us, including me, to be trading. So net, I would say it wasn't an awful day, it wasn't a great day. I wish I had super magical powers that could tell me that we were going to come straight up to my target, was a target to the upside. I don't. Even if I have an upside target, I still need a proper entry to the downside. This falls in line with guys like Don Miller who have written, the importance of your entry is so much more important than what your upside target is, because getting a good entry and being able to control your losses is key. This falls in line with what Dr. Brett Steenbarger says, which is don't chase every type of market. Know what your market is, wait till you see your market, and then capitalize on those trade setups. And then lastly, the thing that I did the best today was I recognized that we were in trend day up and didn't continuously call out shorts. That would have been frustrating to work and ultimately would have failed, right? That my time limit would have kept me safe in terms of P&L, but really the opportunity was rather limited, right? If the two zones that I had predetermined where I wanted to trade, or the three zones, all of them provided rejection at the appropriate points in the day, and then this trade simply came too late in the day. Had we maybe hit this at 1 o'clock, I would have more than loved to have taken a short at this 21.24, 21.25. So I'll keep it rather brief. Looking at tomorrow, I think the best place to look is going back to the volume profile. It will be very important for us to get above 21.32 or hold above 21.19. But within this area, what do I expect? I expect chop and balance within this area. Why? I have 6 days worth of evidence that says we've gotten that. Now, if we get above 21.3250, I'll expect more of a directional move. It doesn't have to work out that way. I'll go right back to my tools. First tools are going to be in the morning. What is the size of the rotation in the first half hour? Do we have more than a 6 to 10 point move overall? Secondly, are there counter rotations within that move? Next, have we cleared above 21.32 or are we trading below 21.20? If we're between 21.19 and 2132, I'm going to expect slow, grindy markets. If we're above those 2 points, I'll expect faster markets. And then last, I have no idea which way we're moving tomorrow, whether we're moving higher or lower. Although, obviously, it doesn't take much of a genius to go ahead and say we're in a bull market. It would not be shocking to see us trade above 2132. But first, I want to see it with my eyes, and I want to trade what I see, not what I think should happen. It is important to note that all of this trade area, pretty much all day, both yesterday's and today's market, was all relatively poorly auctioned. It's horribly auctioned from 2110 pretty much down to about 2103. It's somewhat poorly auctioned below here, really down into this area. At this point, this 2095 area, this open gap, still could possibly get tested on the downside. On the upside, anything above 2132, those are new year-to-date highs, right? There is no structure. We're simply looking for potential exhaustion points for shorts, and preferably we're finding rotations down if we're trading above 2132 to be able to ride the move to the upside. Conversely, if we break above 2132, then find ourselves trading back and holding back below 2132, I would look for a trip to the bottom end of the range at 2119. Below 2119, things could get fast and furious. Back to the downside again, 2115 followed by 2110, and then 2100 and 2095, all very key areas on the downside. Anyways, I hope everyone had a really great day. I'm going to go grab a beer with a buddy of mine. Hope everyone has a great night. I will talk to y'all all in the morning. This will be uploaded later this evening. Have a good night. Oh, by the way, I forgot to mention, anyone who would like a pass, a 1 week free entry into the both to get access to the charts and the live market preview, simply send me an email. Send it to tradeandperform@gmail.com. Email address is right below at the bottom of this window that you're looking on at the blog, or send me a tweet or a note on StockTwits. Have a great night, guys.